Very good morning. So today we gonna continue our next session on business valuation. Last class we were discussing on mergers and acquisition. We have discussed lot of interesting formulas and we have started doing problem. We were done two problem and one problem I hope all of you have submitted. Going further, today we continue our discussion. So before viewing this lecture, I suggest all of you to recall last class equations. What is exchange ratio? What are the methods of exchange ratio? How the MPS, PE ratio, market capitalization, all those concepts I want you to revise. Okay. So question number 3. A Limited is considering the acquisition of A Limited is considering the acquisition of B Limited with stock. Relevant information is given below. So A Limited is acquiring B. So A is the acquiring company, B is the target company. Present earnings, equity shares, EPS, PE, all the information is given. What is the market price? Are you ready? So we gonna start with question number 3. Market price. We know the market price equation. EPS into PE ratio. EPS into PE ratio. First we will find out for A Limited. What is A Limited market price? EPS 1.875 into PE ratio, which is 10. So what will be the answer? 1.875 into 10, 18.75. Now we can go for B Limited. How it will be for B Limited? 1.25 into 5. EPS is 1.25, PE is 5. What will be the answer? 6.25. So market price of the company is over. Now what is the market capitalization of each company? We know market capitalization is nothing but market price into number of shares. Market capitalization equal to market price into number of shares. First we can go for A Limited. What is the number of shares? 4 lakh. A Limited market price is 18.75. You will get a 75 lakh. The same way we have to do for what? B Limited. Can anyone help? What is it for B Limited? It is 2 lakh shares into market price is what? 6.25. lakh 50. So we have finished B part also. If PE change of A Limited changes to 7.5, what is the revised market price? So EPS is not changing. EPS is 1.875, but PE changes to 7.5. What is the answer? 14.06. We will see any other decimal out there. 14.0625. Does the market value changes of A Limited? What is the revised market value? See, your shares is 4 lakh into 14.0625. Definitely market price will change. 4 lakh into 14.025. Yes, market price changes. We can say market value reduces by, what is the amount? It was 75 lakh. It come to for 5 lakh. We can say market value reduces by 18 lakh 75. How interesting. See, regularly coming. That's what I told in the last class. Sometimes up 15 mark, sometimes up to 25 mark coming from this area. What would be the exchange ratio based on market price? Take revised price. So exchange ratio. Exchange ratio equal to market price only. So market price of target company. So target company is B Limited 6.25. Market price of acquiring company 18.75. This will be the answer, like that only. Don't want to go anything big. No, they tell revised price. We have to go with revised price 14.625. They are telling very clear we have to go with revised price. So instead of 18.75, we have to go 14.0625. See, 10 mark in your pocket, answer is over. Sometimes it comes even for 12 mark also. So question is over. That's all. Now we will move on to question number 4. So what is question number 4? A Limited is considering takeover of B Limited and C Limited. They are planning to go with B and C. The financial data is given. Equity share capital of rupees 3 each. 1 second. It is, I guess, it is not 3 each. It's a printing error. See, I guess there is a small correction we have to make. It is not 3 each. Generally, very rarely only will come 3. It is 10 each only. Equity share capital of rupees 10 each. 450 crore, 180 crore and 90 crore. Earnings is 90, 18 and 80. Market price is 60, 37 and 46. PE ratio. They are asking us to find out PE ratio. See how to find out PE ratio. PE ratio nothing but market price by EPS. Are you ready? Great. So question number 4. Calculation of PE ratio. Are you ready? First, market price. What is the market price? 60, 37, 46. 60, 37, 46. Now we have to find out EPS. Earnings is given first. Earnings is not EPS. Earnings divided by number of shares only EPS. So what is the earnings? It is in crore. 90 crore 18 crore, again 18 crore. Now number of shares. Here you must be very clear. See, previous question, no, number of shares was directly given, but here they given equity share capital of rupees. That means here is total value. So if you want to get number of shares, one share value is what? 10 rupee. You have to divide with that. So 450 by 10, you will get what? 45. Here 180 by 10, you will get 80. 90 by 10, you will get what? 9. So earnings is 90 crore, number of shares is 45 crore. Both are in crores. So no need of set off. So what will be the EPS per share? 90 crore divided by 45 crore, you will get 2 rupee. Here 18 crore divided by 18 crore, you will get 1 rupee. Here 18 crore divided by 9 rupee, here you will get 1 rupee. Now you have to find out what? PE ratio. Can anyone help me? What is a PE ratio? PE means market price by EPS. Market price, MP, that is P stands for market price, that is 60. EPS is 2. You will get 30. The same calculation will come. 37 divided by 1. You will get 37. Here 46 divided by 2, you will get 23. So this is the answer. Half mark now already in your pocket. Now what is next? Earning per A limited after acquisition of, so earning of A limited after acquisition of B limited and C limited separately. Separately means first A alone, next C alone. Will you recommend merger of either of the both the company? Justify your answer. So point number 1. See, so far all the question we have done, the question was telling what is exchange ratio, whether it is market price basis, whether it is EPS basis, or whether it is given. See, today I want to teach you one more method also. See, today I want to teach you one more method also, exchange ratio. I told you have to keep some space. Yes or no? I always will tell you to keep some space in your equation area. So I hope all of you are writing equations separately in the back side of your notebook. So what I want you to make it is point number 4. On the basis of PE ratio. What is that? PE ratio is considering both market price and EPS. So what will be the exchange ratio? Exchange ratio equal to P of target company divided by P of acquiring company. So now going back to our problem. See, now here we have question is nothing mentioned. So if nothing is mentioned, see, if you see that further information, see, if the nothing is mentioned, it is, you can go with market price. This is our ICMA study material question. In your ICMA study material also they have go with the assumption called market price. See, whatever the method you use, you can give a note, because the question they are not specifically mentioned. Question they are not specifically mentioned. There is no agreed is given. See, EPS method will not come, because impact on EPS, if it has to come, then EPS method will not come. So we will go with market price. First preference method, if the question is silent, is market price. First preferable method, if the question is silent, is market price. Are you ready? Yes. So case 1. Case 1. A limited and B limited. First exchange ratio. Already we told market price. So what will be the market price? Here it is 37. divided by here it is 60. So 37 by 60, 0.667. So what will be the number of shares? Number of shares. Your existing number of shares is 18 crore. Your existing number of shares is 18 crore into 0.617, or we can round off it. It's actually 0.667, it will go off. So 18 into 0.6166 is like that you can give. You will get 11.11 crores. 11.11 crore. This is the number of shares issued. Number of shares. So what is the revised total number of shares? Revised total number of shares. See, A Limited already having a shares of 45. Now 11.1. So total will be 45 plus 11.1. 56.1 crore shares. 56.1 crore shares. See how interesting. Now, what is further we have to move? What is the combined earnings? Combined earnings equal to 90 crore plus 18 crore. 90 plus 18. So what will be the EPS after merger? EPS after merger. See, your combined earnings is 108 crore. Here it is 56 crore. $1.921. Now case 2. We will go with case 2. What is case 2? A Limited with A Limited and C Limited. A Limited and C Limited. First we will go with exchange ratio. What is exchange ratio? 46 by 60. 46 by 60 you will get 0.667. What will be the number of shares? See, your existing number of shares here only 9 crore. So 9 crore into 0.7667. What will be the answer? You will get 9 into 0.666, 6.99 crores. $6.9 crores. What is the revised number of total? Revised shares 45 plus 6.9. That is 45 is already with A Limited. Newly we are giving only 6.9. 51 crores. Now, what is the combined earnings? Combined earnings 90 plus, here the earning same 18 only. So you will get 108 crores. What is the EPS after merger? See, you are having 108 crore divided by 51.9. See, per share. Now you tell me, What is the impact? See, if you look here, before the merger, for A Limited, EPS was 2. Before the merger, A Limited EPS was 2. If you look here, merger of either both the company or justify your answer. Here, who is gonna buy? A Limited gonna buy. If A Limited gonna buy B or C, they will buy if they are getting any benefit. Yes or no? A Limited will buy B or C if they are getting any benefit. See, look this answer. A Limited existing having 2. If they go with B Limited, they will get a EPS of 1.9. See, what is the impact? Reduces from existing EPS. The first impact is what? Reduces from existing EPS. See, now if you look here, see my dear friends, here case 2, A Limited and C Limited, what is the EPS you are having? 2.0892. What will be the impact? EPS increases from 2 to 2.08 per share. Now you tell me which is best. See, here your EPS is reduces. Here your EPS is what? Reduces. So EPS reduces, now you won't go with. So it's a red. EPS increases, it's a good sign. So it's a green. So the comment, final comment will be what? Merge A with C Limited. Merge A with C Limited, because when you go with C Limited, then only your EPS is increasing. So this is how the point. So hope you can copy, you will complete it. See, fifth question, I hope all of you have done the answer. See, exchange ratio based on EPS is very simple. Don't want to go lengthy answer and all. 1 by 2.5, that's all. Your study material having a lengthy answer, but don't go for that. Answer is very simple, 1 by 2, that's all. Now we will go with question number 6. Now we will go with question number 6. What is question number 6? Company X is contemplating the purchase of Y. X Limited has 3 lakh shares having a market price of 30. Y has 2 lakh shares having a market price of 20. EPS is 4 and 2.25. Management of both the companies are discussing 2 alternative proposals for exchange of shares. So 2 proposals are there in proportion to the relative earnings. So in proportion to relative earnings means what? EPS method. What's it method? EPS method. Second thing, 0.5 of company X for 1 share of Y. That is, if you have 1 share in Y, you will get 0.5 in X. You are required to calculate earning per share after merger under 2 alternative. What you have to do? Earnings, EPS after merger of 2 companies. See, EPS we know already. After merger also it will be remain same. But exam purpose we have to work it out and give. Second alternative anyway we have to do. Next, to show the impact on EPS to the shareholders under the both alternative. To show the impact on EPS. Are you ready? Great. So first we will have a data. See, let us discuss some clue for you. See, generally you can able to make a table just like what they given in the some previous question, so that you will get a clarity. What was the company? X. So X is a acquiring company. Y is the target company. See, first we should know this detail first. Okay. What is the number of shares? See, most of the data are given in the question. Company X has 3 lakh shares. What about Y? Y have 2 lakh shares. EPS is what? For 2.25. Market price is 30. See, why I done this table? Because to find out your earnings. How to find out your earning? See, earning per share we know. Number of shares also we know. If you multiply, you will get it. The same thing. Number of shares you know. EPS you know. So for getting the earnings only, I have prepared this table. Now we have to do each case. First step. Case 1. What is case 1? In proportion to relative earning. First, exchange ratio. How to find out exchange ratio? Earnings only 2.25 divided by 4. 0.565. I will do shortcut. Revised number of shares. How revised number of shares? See, existing you have 3 lakh plus you have 2 lakh shares in the earlier company. You gonna get new share 0.565. That means we do everything very shortcut. Are you clear? That is 3 lakh existing plus revise. Revise how to find out? 2 lakh into 0.565. So what will be the answer? 4 lakh 12,000 4,12,500 shares. So revised number of shares you got, it is none other than 4,12,500 shares. So what is the revised EPS? Revised EPS. Your earnings is what? 12 lakh plus 4 lakh 50 divided by number of shares. Your revised earnings. We know it will not change. It will be same as X before and after. It will be remain same. Okay. Now case 1 we have completed. Now we will move to case B. What is case 2? Impact we will discuss last in a table. Case 2, 0.5. Exchange ratio is given as 0.5. So what will be the revised number of shares? Your 3 lakh plus 2 lakh into 0.5. Sorry. You will have 4 lakh shares. So what is the revised EPS? See, 12 lakh plus 4 lakh 50 divided by number of shares 4 lakh. See, it's increased. So here you have your revised EPS. See how interesting. We have done almost completion of the answer. See now what they are asking now. to show the impact on EPS of shareholders of the two company under both the option. Okay. Impact on shareholders. First case 1. Existing EPS, revised EPS. X limited, Y limited. Here revised we will give bracket. Equal. See here you are getting 4. Here you are getting 4. See here revised EPS for X is 4. Here revised also 4. See look here, existing is here the data. Existing also 4, revised also 4. So what will be the impact? No change. Now here existing is 2.25. Now you may believe here where it is for now. 2.2 you are getting 4, but the exchange ratio if you look you are getting only 0.5625. So 4 into 0.5625. That is, though you are getting 4 rupee per share, but you are not getting one equivalent share, you are getting only 0.5625. That means 2.25. That means no change. See, this point is very important. Sometimes students simply give here also 4 because 4. See, this is after merger. See, after merger, Y limited shareholders is not getting equal number of shares. For every one, they are getting 0.5625 only. That means if they are getting 4 EPS, as far as old company is concerned, it is only 2.25. That is what I call it as what? Equivalent. Not correct. Now we will go for case 2. Because we know case 1 is EPS method. If you do EPS method, there won't be no change. If you do EPS method, there won't be no change. Okay. So what is the revised? Here you are getting 4.125. 4.125. Okay. Here increase. That means X limited it is increasing. Now going to Y limited. See 4.125 you are getting, but equivalent exchange ratio is 0.5. That means though you are getting 0.125, though you are getting 4.125, your equivalent only will be what? 2.20. It is what? Decrease. Here you can make increase by what is the increase by 0.25. Here you can write it. See, this is I am just telling. Now exam purpose answer is over. Exam purpose answer is over, but I will tell you one concept. Here it is decrease by now one as far as X limited is concerned, it is increased by 0.125, but whereas Y limited is concerned, it is decreased by 0.88. Why? See, suppose let me tell you one thing. If you have 10 rupee, one person if it is gone 10, another person should get a gain of what 10. Why it is not equally? It will come equally only. The exam perspective answer is over. But some of the friends will have thinking that, sir, if it is increased by 0.125, Y limited should come decrease by 0.125 only na. Why it is coming 0.88? For their benefit, I am telling. See, listen here. This is not part of exam answer, but I am telling. What is the total increase? Total it will be 0.125 into how many number of shares you have? You have number of shares is equal to 3 lakh. So now listen here. 0.125 you are getting benefit. For a 3 lakh share you will get 37,500. You will get a 37. That means total increase for 37,500 for X limited. This is not a part of exam purpose, but I want you to be good in concept. Total decrease for another company. See, this has to be same. That is what I want to prove. 0.18 into 2 lakh. Round off. It's actually it's coming the same number. See, look here. For Y limited. That means in total, one person decrease will be another person gain. Some friends may be thinking, sir, why it is not coming? That purpose only I am telling. Okay. So great. Dollar symbol you ignore. Answer is over. Now we'll move on to question number 7. Now we'll move on to question number 7. Are you ready for question number 7? What is question number 7? The following information is provided relating to acquiring of Firm Mark Limited and Task Mask Limited. Acquiring Firm Mark Limited and Task Mask Limited. Earning per share, number of shares, P ratio. What is the swap ratio in relating to current market price? What is the EPS of Mark Limited after acquisition? What is the expected market price of Mark Limited after acquisition? Assume that PE ratio remain unchanged. Determine the market value of the merged firm. Calculate gain or loss to the two independent companies after acquisition. Are you ready? So Mark Limited is acquiring company. Mask Limited is the target company. Yes or no? Great. So question number 7. First we will go for first part, swap ratio. How to find out swap ratio in terms of current market price. Great. So if you want to find out swap ratio, first you should have to find out market price. Earnings 200 lakh, 40 lakh, number of shares 20 lakh, 10 lakh, EPS 200 by 20 lakh 10, 40 lakh by 10 lakh 4. What is the PE ratio? 10 5. We know the market price equation, EPS into PE ratio. So market price is equal to EPS into PE ratio. Here will be 100. EPS into PE ratio. Here will be 20. So what will be the swap ratio? 20 divided by 100. 20 by 100. You will have 0.2. Swap ratio is another name for exchange ratio. Swap ratio is another name for exchange ratio. So what is the EPS of Mark Limited after acquisition? So first, revised number of shares. I will do again shortcut. Your existing number of shares is 20 lakh plus you have 10 lakh shares into 0.2. This will be the answer. Yes or no? So, previous number of shares will be 22 lakh. It will be 22 lakh. What is the expected market price per Mark Limited after acquisition, assuming that? So, EPS we will find out. EPS after acquisition. What is the earnings? 240 lakh divided by 22 lakh. EPS after merger will be 10.9091 per share. Now, what is the expected market price of Mark Limited? Assume P ratio remain unchanged. So, expected market price. Market price after merger equal to pre-merger PE into post-merger EPS. So what is the pre-merger P? 10 into 10.9091. 109 point. Per share. 109.91 share. So determine the market value of the merged firm. Merged firm, what is the market value? Market value is nothing but number of shares into market price. So merged means you have to take the merged share. Market value of merged firm, which will be 22 lakh shares into 109 per share. You will get an answer of 240 crores. It will be rupees 240 crores. Now, determine merged value. We have done that. Now, after doing the market price, they are asking gain or loss to the shareholders of two company after acquisition. See, the gain or loss we can do two way. Listen very well. Gain or loss we can do on two way. One is EPS method, another one is market price method. That means what is the change in EPS? If EPS is reducing, so loss in EPS, or EPS is increasing, gain in EPS. That is one way. Another way is market price comparison. Market price increasing, then market price gain by this much. Market price decreases by this much. So we can do two way. Here they are not telling what method, but if you see the flow of question, fourth para they are asking what is the market value. So continuation to that, even if they ask the fourth point is discussing about market value of the company. So fifth point they are asking gain or shareholders. So since fourth para is discussing about market value basis, it is advisable to do under market value basis. That is gain or loss on the basis of market value. I am repeating once again, we can do gain or loss either market value method or EPS method. Even you can do EPS also here. But since the flow tells that we have to do on the basis of market price, so we have to do on market value basis. So first step, analysis of gain or loss. See, look here, company. What all the company we have? We have Mark Limited. See, we take only original shares. We take not revised. Mask Limited. Mark and Mask. See, what is the market value before merger? You can make merger also. I don't have the space. See, you have number of shares, you have 20 lakh into what was the market price we have found out? 100 rupees. So it was some around 2 crore, 2 crore or 200 crore. Here you have 10 lakh into what is the market price? 20. So it was 2 crore. What is the market value after merger? See, after merger, mark existing shareholders only we do. Oh, okay. After merger, we have one. We have what we call 240 crore. No, only existing. So that means existing number of shares. That is on the perspective of existing data, 20 lakh. Market price increased to 109. So here it is. Here you have market price this much. Here you don't have 2 lakh. You got only how many shares? Your shares was, though you are having 10 lakh, you got shares eligible to 0.2, that is 2 lakh. 2 lakh into 109. Here it is. So before, so what will be the gain after merger? gain after merger. This is this value, this is this value, this is the gain. So both the company got the gain. See, his gain is based purely based on market price. So it will not have any impact on what? It will not have any impact on what? One company reduce, another company increase. It won't come. Only EPS only, because EPS the amount will be remain same. That is the reason. So we'll counter check whether it is correct or not. You have 20 lakh shares. Yes. Yes. So more or less, whatever the amount here, 10 times benefit for them. Whatever the amount here, here it is 18 lakh, 1 crore, 81 lakh, 81,802. Here 81 lakh, 81, 80 lakh, 18,181. So you can put rupees. Please copy fast. Okay, make it very interesting. Okay. So hope you have completed. We'll move on to next question. So which question will move next? Question number 11. A firm is, okay, it's same ditto question. You can do it as a homework. Question number 11 is a same ditto question. You can do it as a homework. Question number 12. The following information is provided relating to acquiring company X Limited. So acquiring company is X Limited, target company is Y Limited. Number of shares 10 lakh and 7.5 lakh. Market capitalization. What is market capitalization? Number of shares into market price is equal to market capitalization. P ratio, reserves and surplus, promoters holding. What is promoters holding? That is those who are initially started, is other than market holdings. Directors of both the companies are decided to give a fair deal to the shareholders and accordingly swap ratio based on weight. Yes, here not one, it is based 40% for earning, then 25% is for book value, market price another. Calculate the swap ratio and calculate the promoters holding. We'll start. Great. So first is on the basis of earnings, book value and market price. So we'll find out each data. What is the question number? 12. We have X Limited, Y Limited. Market capitalization. What is for X Limited? 500 lakh. Here 750 lakh. What is the number of shares? 10 lakhs, 7.5 lakh. So what will be the market price? We know market price is equal to market capitalization by number of shares. So you will get answer as 50. Here it is 100. Now, your P ratio. What is the P ratio? 10 and 5. See, we know MPS is equal to P into EPS. So we can say what? EPS will be what? MPS by PE. So MPS is 50 by PE we will have 5. MPS is 100 by PE we will have 20. See how easy. We can find out now total earnings also. All are working mode. So 5 into number of shares 10 lakh. Here you will have 50 lakh. Here 20 into 7.5. You will have 150 lakh. Now we have to find out on each ways. First earning. Exchange ratio. 20 earnings is what? EPS only. 20 by 5. Second case is what? Book value. So book value we have to find out. See, listen here. X limited and Y limited. What is the share value? See, 10 lakh into 10 rupees. 10 lakh into 10 rupees, 100 lakh. 7.5 lakh into 10 rupee, 75 lakh. What is the reserve? Book value equal to equity plus reserve. Book value equal to what? Equity plus reserve. So what is the reserve? 300 lakh. Here what is the reserve? 165 lakh. So what is the total book value? We have to add both the items. Total book value, we have to add both the items. Now what is the book value per share? That is what we require. See, 400 lakh. How many shares we have? Lakh. Here 240 divided by how many shares we have? 7.5, 32. So what will be the exchange ratio? 32 by 40. 32 by 40, 0.8. Now third method is none other than market price. It's very important. New model, lengthy model, market price. So what is a market price method? It's very easy. Exchange ratio equal to, what is the market price? We have already found 150. 100 by 50. So now 150. Now we have to find out weighted exchange ratio, because they tell we have to follow a weighted method. How weighted exchange ratio? That is, first we have to give 0.4. So 0.4 into 4 plus. Next we have to give 0.25. 0.25 into 0.8 plus. Next we have to give 0.35 into 2. What is the answer? .5. Exchange ratio is what? 2.5. Exchange ratio, another name only, swap ratio. So what will be the new number of shares? New number of shares will be, see here, 7.5 lakh shares into 2.5. 7.5 into 2.5. 18.5 lakh shares. 18.75 lakh shares. Now they are asking, what is the promoter's holding after acquisition? Are you ready? First, promoters holding in X Limited. What is promoters holding in X Limited? See, X Limited number of shares is 10 lakh. Number of shares is 10 lakh, already given. 4.75 lakh. Promoters holding in X Limited 4.7 lakh. Now, promoters holding of Y Limited in X Limited. See, what is the meaning is that, see, Y Limited, they have already 5 lakh shares. So that 5 lakh, you will get 2.5 shares. It will be 5 into 2.5, 12.5 lakh shares. So what will be the total promoters? So what will be the, this is after acquisition. That is the reason I have taken 2.5. Suppose if it is before acquisition, we won't take 2.5. So total promoters holding equal to, total promoters holding equal to 4.75 plus 12.5. 4.75 plus 12.5. 17.75 lakh shares. What is the total shares after acquisition? Total shares after acquisition equal to, what will be? You will have existing number of shares, you have what? 10 lakh. You will have additional is what? 18.75 lakh. So total will be 28.75 lakh. Yes or no? 10 plus 18.75, 28.75 lakh shares. So what is the percentage of promoters holding? Percentage means you have 17.25 out of 28.75, which will be 60%. So promoters will have a holding of what? 16%. Calculate swap ratio, we have find out. Promoters holding also. So what is the EPS of X Limited after acquisition? So EPS after acquisition. How to find out? First we have to find out the earnings. 200 lakh divided by total shares is what? 28.75 lakh. So what will be the answer? 200 lakh divided by 28.75 per share. 6.9565 per share. See how you go 200 lakh. See, the 200 lakh is 50 lakh is the first company, second company 150. Accordingly, you got it. Now, what is the expected market price of share of X Limited after acquisition, assuming, sorry, assuming P ratio is firm X Limited remain unchanged 10 times. So, what will be the market price after acquisition? 6.95, 6 point, we can count off into 96 also, or 9565 into number of shares is what? 28.75 lakh. What will come? No, sorry, they're asking market price only. 6.95 is your EPS into 10. That is your P is what? 10. Which will come 69.57 per share. What is the market capitalization? Market cap is nothing but market price into number of shares. So market capitalization equal to your market price is 69.57. Small round will be there. Into how many number of shares? Total number of shares will be 28 lakh 75,000. $28 lakh 75,000. So this will be the market capitalization. This will be the market capitalization. I guess it's 2 crore somewhere. Now, last, free float market capitalization. See, this is a new word for you. See, what is free float? See, you know promoters. What is balance after promoters? That is what is called free float. What is balance after promoters? That is what is called free float. So if you look here, your promoters holding is what? 60%. So market tradable, that is balance 40%. So free float market capitalization will be free float. They are asking in rupees. Yes or wrong? Market capitalization will be. It's very easy. This is our total capitalization. Promoters is 60%. If promoters is 60, others will be 40. So 40 will be there. So 0.4, which will be 80 lakh. This will be the 80 lakh. Both are in rupees. Both are in rupees. You can give the rupees symbol. Okay. So the question is over. Look like a different model question, but all are same model only. Look like a, but the exchange ratio is little bit interesting calculation, but balance everything easy only. But balance everything easy only. Okay. So I guess I can give you some more. You can do 16 as a homework. You can do 16 as a homework. (21) also you can do it. So 3 questions you can do yourself. 21 you can do it as a homework. 21 you can practice. 16 you can practice. Then already question number 11 we have given. So I hope this is more than enough for the day. So hope your studies are going. So we are winding up for the session with this. Okay. Wish you all the best. God bless you.